All right. Good morning, everybody, and welcome. It's TheoTRADE Chat. It's Don Kaufman here. Yeah, I didn't put the camera on today. I'm not feeling it. It's all wrong. Maybe a little bit later in the session. It's all wrong for me today. It's March 22nd, 2024. Spoos. They're broken. They're red. They're down three handles today. There's absolutely nothing going on in terms of volume. The volume is it's light, 170,000 contracts. There's been no volume throughout the course of this week. Even look at yesterday's trade. It's so weird. All right, we'll have to look at that more after the cash open because there's change afoot in this marketplace. So the S&Ps are going to open relatively unchanged. The bonds, though, are on the move in quite a big way. Bonds have a decent bid under them. I have a question. Did anybody do the TLT trade I did? Because if you did, the TLT trade was done on Wednesday morning. If you did, the TLT trade is unequivocally in the money. It's going to be in the money at the cash open, and you're going to have to do something about it before today's expiration. Nevertheless, 2 minutes to go to that cash open, and we have a a slop fest on our hands. Let me define slop fest. The financials are up by like 3 cents. The energy sector is massively unchanged. Technology is largely, damn it, technology is largely mixed. There's no movement. Microsoft. There's no movement in Apple. There's no movement in Amazon. Oh, come on. It's like 25 cents. Google has a bid, maybe because they're not being sued. Okay. I love the Department of Justice going after Apple. I was just reading an article. What's the worst that could happen to them? They'll pay a fine. Okay. It's not like, they're going to break them up. They're going to do this. They're going to pay a fine. That's worth fighting over because the fine could be billions. So why not pay your attorneys millions to fight for billions? It's good stuff. It's because you can't admit any wrongdoing. There'll be no wrongdoing. We will play along. We will donate to every campaign. Anyway, everything across the board is predominantly flat this morning. Tesla is taking a hit. It's a story out of China. Production slows. Nvidia is in the red, but nominally so. So we're going to come into a cash open, largely sloptastic. Ticks are going to be scattered and broken. Advanced decline lines scattered and broken. Not to say that action cannot persist. One aspect worth mentioning, the dollar, kind of a rip in 2 days to the upside. Let's come to today's cash open. All right. So as I was calling for a slop fest, and S&Ps are literally unchanged into the open. Look at that. They like me. They really, really like me. FedEx has a nice bid under it. I have to tell you, I was surprised by that. It's earnings. Okay. It's earnings. Here's another earnings. Nike, they don't like you, do they? Okay. Between Nike and Lulu, oh, Lulu's getting the crap kicked out of it today. I enjoy a good Lululemon beating. I enjoy a Lululemon beating as much as the next individual. Anyway, it's better without the camera on. Okay, I feel like you're not watching me. I can get away with a lot more. Anyway, the ticks they're stronger than I would have anticipated into the open with a positive 600 tick, but Nasdaq is squirrely. I assume the Nasdaq's actually going to break down just a little bit in here. I'm going to explain why in a moment. So by breakdown, I don't mean like a massive sell-off, but I'd assume maybe a little selling is going to come in to Nasdaq today. So as many of you guys know, if you look at the SPX, the expected move, it is important to know that the upper edge of the expected move is at roughly 5,200 and that we are trading 5,240. Uh, the week though, you know, I think a lot of people are probably going to look at this week and say, chicken's done. We've already made the move, and maybe rightfully so, but one aspect, again, well worth taking a look at. So today we have an expected move. The daily expected move today is roughly plus or minus, was it 24 bucks? I think it's 24 bucks. Yeah, plus or minus 24. So the chances of us even getting back to the upper edge of the expected move, that would be a 40-point decline, diminished. No question about it. So there's diminished opportunity to pull back to that. But that would be, the trade that you would look for on a day like today is in any situation where you're outside the expected move and it's a Friday, it doesn't matter how far outside the expected move, okay? There's still, probability you pull right back to it. That's the higher probability trade, even though it's 40 points. The market's not anticipating that, but it is what it is. That's why I said, the highest probability is to just basically stay put and live to tell the story the next week. Look, when you start looking back on the year, there have not been too many crazy breaches. Markets have been rallying, but they've been rallying within, in most weeks, the limit of the expected move. By the way, you're looking right now on your screens at the expected moves. Okay, this right here, okay, is the beginning of the year. It's one breach to the outside. We have only two other breaches. So there's three breaches, okay, into the beginning of this year. And, we're coming to the end of the first quarter. I'm sure Jeff will be screaming about window dressing. However, it is notable, okay, that we've had some decent sized pullbacks to grab us back into the edge of the expected move. We'll see what transpires today. Don't discount, the power of the force in here to pull us towards that upper edge of the expected move. Again, although we have been incredibly bullish, okay, we have also hit expected moves kind of week in and week out. And that's one of the points, like, we hit right here, we hit right here, we hit right here, we hit right here. Okay. That was actually a breach. Basically hit it right there. It's just, 3-4 weeks in a row of hitting an upper edge of an expected move following the breach of an expected move. That's, 5 consecutive weeks of doing some stellar movement to the upside. But this, for those of you that are looking for, tops and so forth, and I'm not going to sit here and preach to you about like, this is a top, that's not a top. Okay. The one aspect worth noting is that we have breached through the expected move substantially this week. So we were only anticipating about $81. Say only, that's a big move. Okay. You had this $80 expected move. We started at 51.20. Here we are. It's 120 points higher. Okay. So you're up 120 points with expectations of 80 points. It's a significant breach. The reason I was mentioning, for those of you looking for like, signs, that is, pretty good indication markets have moved much further than anticipated. Okay. I wouldn't go much further though than that, at least at this point in time. The S&Ps, as I kind of indicated, slopping along this morning. It's the Nasdaq though that I would watch a little bit today. And it's because all of the squeeze that we have seen, okay, in the markets. By the way, yeah, but Mark was mentioning skew. I'll get there. Okay. All of the squeeze that we've seen in this marketplace has relinquished itself, and it doesn't necessarily cause sell side activity, but it is very notable that the stocks, okay, that unequivocally got us to where we are in the S&Ps, okay, there's no activity in them right now. It just, and I've mentioned this just week in and week out this year, that it's basically, we're getting these trading firms that are turning all their firepower that they have to like Nvidia, all the firepower they have to Meta. I mean, look at them on a year-to-date basis. Spectacular movement to the upside. Nvidia obviously takes the cake over here, up some 91%, but it most definitely appears that some of that is diminished. It doesn't mean they can't come like right now. Look at this. There's heavy call buying going on in Nvidia. It hasn't worked at all this week. Okay. Yeah, we traded higher, but we traded higher on low volume and Fed news. The really critical aspect of this, though, what's to come of it? There's no activity right now driving this. And as I said, it could come raging right back. You know, everybody could decide, okay, let's turn those machines back on and start buying calls again. We just haven't seen it though. And as I said to you, the volume has been relatively low. So I started looking at stuff in the S&Ps just to make a quick point with this. And we'll talk a little bit about skew. This week, there's Monday, Tuesday, Wednesday, Thursday, and here's obviously Friday. So this week started right here, okay? It's the lowest volume. Now, granted, that was a roll, so don't worry about that, right? It's the lowest volume, though, that we've seen in quite some time. You can come back and, you know, some of this is actually holiday trade back here, by the way. There's some holiday trading weeks and so forth in here. But the volume in the S&Ps, okay, has really diminished, especially for what is the strongest week of this year. So we're in the strongest week of the year. And again, you don't have to look very hard to see there's no size trading. It's actually one of the most dull in terms of volume. So then I started looking over at like stuff like Nvidia. Nvidia this week, it had, you know, 2 very strong days. Okay. Everything thereafter, it's gone. It's gone. And volume has been kind of in a crescendo over here to some degree. Obviously, this is a earnings announcement, but volume is kind of picking up. It's totally dissipated. There was nothing yesterday, and there's absolutely no volume. The Fed day, there's no volume yesterday, and today is just it's dead, totally dead. It doesn't matter that we're 10 minutes into the trading session. Okay, there's nothing going on. It's precarious at best. I see it also in Meta. The volumes are dropping off. Okay, whatever that squeeze and what was driving the squeeze, it's completely dissipated. Don't know exactly what to make of it yet, but my assumption is the Nasdaq pulls back a little bit on this. Again, cannot stress to you enough though. You just have to be aware. Maybe things quiet down and they come rushing back in. Okay, I don't know yet. It's too early. I can definitely see call buying in Nvidia. You know, why stop? Well, don't break a good thing. Don't you break a good thing. Anyway, I just I find it interesting to say the least in here that again the drivers of the marketplace they're not going anywhere. By the way, advanced decline line is positive right now. We're going to look at around a couple stocks. Before we do so, skew flew last night. The one of the higher skew prints that we've seen, and that's real. There's no question that that is an accurate interpretation of present skew. We're back up to a 154. So this makes sense that skew rose significantly. The VIX is not the greatest measure anymore of volatility. It helps measure volatility, but it's like 30-day near money volatility. What has transpired is that volatility, near money volatility, has started to collapse, and way out of the money volatility has actually risen versus the out of the money calls. And it makes sense because as volatility kind of collapses, it it makes it reasonable for trade. So volatility collapsed kind of on Wednesday, and then Thursday trade came in and bought out of the money puts for hedges. A lot of people are looking at this, and I think we all realize, even if you're bullish, I don't care if you're bullish or you're bearish, a lot of people don't look at it, even if you are bullish, and say, it doesn't matter what you think. If you're not hedging right now, you out of your mind. Okay, they're coming back in and they're buying some hedges. Um, the VVIX has also collapsed, which this is indicative. There's no hedging going on in VIX. The hedging that's going on right now is apparently inside of the S&Ps. So I don't know how many traders have noticed, though, the volume that I'm pointing out. Volume of the options, it's all wrong. Volume of the S&P futures, it's all wrong. It's really, okay, obscure that trade just like they just disappeared. All right. Trades usually, when they change, when trade changes, it doesn't just usually disappear. Usually like flips over, things get volatile. This is just weird because, we rocket this week to the upside and then it just flatline, but we rocketed higher on no volume. It's just, and again, it's strange because, and the products that brought us higher this week, like financials. Who in the hell wants to buy a financial? Have you seen how far outside the expected move this crap is? Okay. That's huge by huge. Huge by huge. Financials, though, are outside the expected move. Anyway, significantly outside the expected move. Look at stuff like Apple. Do you know Apple's almost at the bottom of its expected move? Okay, Microsoft, where's Microsoft? It's higher. Okay, Amazon, I'm just bringing you around. Amazon's inside the expected move. The Google. Now, Google has had some good news this week. I do want to throw one out there for you, though. Okay. Sid, we talked about the atomic hedge earlier in the week. I've been talking about hedging for a considerable period of time. Okay. Maybe I can bring one up in a few minutes. Google. Okay. So let me ask you guys a question. Why did Google rally on Monday? Okay. Why did Google rally on Monday? See if anybody gets this. By the way, there's the Nasdaq coming in a little bit as expected. And I said as expected. I'm not surprised at all. There's no activity in any of the big tech stocks other than NVIDIA. And NVIDIA, it's not fierce. Maybe you have Google up to the upside here a little bit too. So what was it that drove the Google to the upside? Anybody? 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 Okay. Anybody at all? It was a conversation, right, that happened between Google and Apple about using Google's AI. By the way, I'm just going to let you know, it was all complete and total crap. Because why? Apparently, there was another conversation that happened between Apple and a company called Baidu. And today, Baidu, okay, was trading to the upside. Why? The exact same piece of crap news that Apple approached Baidu about their AI technology. So which one is it? Apple? Is it Google? Or is it Baidu? And they're just fishing around. It's just Apple's like talking to people. That's it. Okay. It's absolutely ridiculous when you start to think about it, though. Stock gapped up. Nobody's actually talking about the fact that it was all for nothing because they're talking to a ton of companies. They're not in a deal. They're not doing a deal. They're just shopping around a little bit, sniffing around. I like it. It's fluff. I like when pointing stuff out like this because, and the reason I am pointing this out, I constantly tell people, I don't give a damn what you think about a stock. I was actually, I did my mastermind yesterday and was talking about just that. Nothing on the screen, okay, has to necessarily make sense in terms of like, oh, why is the stock up today? And somebody always comes up with a story. Yeah, they come up with a story behind it. It's a good story, okay, but it's still a story. And some stories are real. Some stories are based on real life. Some of them are fiction. Most of the crap you hear in the marketplace, though, is just that. It's crap, right? You got to sometimes block out a whole lot of noise and recognize that markets, they move for reasons that most of us cannot explain. Okay. I sit here and I explain stuff like No, it's unequivocally. NVIDIA, I don't care what you think about AI. I don't care what you think about GPU. I can tell you, though, one thing. The reason it's moving has nothing to do with people buying the stock. They're buying the options. The market makers then buy the stock. Okay. Stock gets sold at the end of the week. It's just crazy. By the way, those call buyers, they're not there. They're not there, right? The size in here, 170,000 contracts, whatever, whatever. I am curious about Tesla right now. The reason I'm curious about Tesla, look at this. So there is put buying going on. It's heavy put buying. Like the sizzle is at almost 9 times. So there's real put buying going on. So what's interesting about Tesla is this is the opposite of what drove us higher. Okay, in Tesla is driving us lower. Nobody loves me. The I can't remember what movie that was from. I'm tired this morning. It's been a long week. Okay. The beatings shall continue until morale improves. Hey, next week though, you only have a 4-day trading week. Okay. Friday next week is closed. It's Good Friday. You know, I've traded for a while and I don't remember Good Friday being off like 20 years ago. I think we had the Monday after Easter off. Okay. Easter Monday. Okay. Hangover from looking at eggs, picking up eggs. I don't know. I think my kids are finally past that crap. Okay. Like 2 years ago, we were on the island and there was like an Easter egg hunt, and the kids went out and they did it. And there was this very strange Easter bunny. I have pictures. Okay. It's not good. It is not good. Okay. It was a very strange Easter bunny, and that thing was trying to touch me. I'd say it was the dirtiest looking Easter bunny suit I've ever seen. I've been screwed up ever since. Who am I kidding? I was screwed up well before that. Anyway, continuing. Need coffee. I have to find that picture. Share it with everybody. Okay. Uh, oh, here we go. Is Easter statistically an up week? Okay. I'll tell you where you can put that thing. Easter bunny. Oh no, the Easter bunny on the island was weird. It was not like a Rasta bunny, but it was like the dirtiest costume. You know what it reminded me of? It reminded me of, I know this is terrible, but Rago's not listening. If you are in Vegas and you go down to the strip, there's these people that are sitting in like the big furry costumes, like all over the strip, basically passed out drinking all day. It could be like 115 and they're still sitting out there in the big, huge furry suit. And they're like the dirtiest, nastiest suits. Like, I don't even want to walk on the Vegas strip anymore. It reminded me of that. And this one was hugging children. Okay. It was not good. Not good. Continuing on over here. Oh man, you guys are killing me, Smalls over here. Okay, I'm all off my game now. So I was looking at Google, which is ripping to the upside, and excuse me, I was looking at Google, it was ripping to the upside, and I was entertaining, okay, the idea, just an idea of an in-out spread in here, but I don't like it because I recognize that Google is right up against its all-time high. Okay. Google, by the way, was down, 3 weeks ago, was down on a year-to-date basis a lot. It's now up about 9%. It's been just a spectacular move to the upside in the Google. More interesting, that's a 2 deviation move right here. It's about a 2 deviation move. This is almost into 3 sigma territory. Okay. I like the idea of it pulling back, but I think that that's a really high risk and one that I do not want to take. Continuing on over here, and then I started looking at stuff like Microsoft. Microsoft has also had 2 fairly significant breaches of expected move, plausible due for a pullback, but it's down a little bit today. And it is what it is. I'll shop around. There's one other one that I kind of like for an in-out spread. Do we think that Intel will continue to go lower? So Intel is aligned at this 42 level. Bear with me here. All right. So Intel, sneezing again. Damn allergies. It's always this time in the morning. Getting up, moving around. Okay. start talking about the Easter Bunny and bad things are happening. That's what we're still talking about the Easter Bunny apparently in the chat room over there. Okay. Uh, you have to be more specific, Dan. Which guy in the movie Uncle Buck? I love that movie. I seriously, okay, I love that movie because it's like back when like PG. And by the way, I don't think there was PG-13 back there. It was like PG was like a little bit kind of racy, and I like it. Okay, it's I can't watch like the PG crap from like Disney. Okay, what's messed up is like the Disney stuff. It's like more influential, but it doesn't use any bad language. I don't like that. That seems far more sketchy. Definitely. Uncle Buck is a wholesome movie. Very wholesome. Okay. They almost beat the crap out of some kid. He threatens them. The one that was like dating the daughter. That's good stuff for me. Good stuff. All right. Intel. Intel is aligned and looks like it's going to break through the 42 level. It has earnings though on 425. The question is, and do you guys like this one? The question is, okay, do you like it? And again, the earnings to me are, as I said, they're on 425. So you're going to have to pick an expiration more shallow than that, which comes to April 19th. And for an in-out spread, I don't mind firing off a few in-out spreads in here. See which one do we like? Um, this is one, but this is a 43, 41, 43, 41. Okay, 220, 221, whatever it takes. Anyway, I am shopping around a little bit for in-out spreads. This one, as I said, is plausible. Okay. Here's a quarter. It is a great movie. Um, yeah, Dimitri, Intel also, Dimitri is exactly right. It's one of the reasons I like the in-out spread. Dimitri was talking about Intel got $20 billion to the government. Okay. What's 20 billion amongst friends? Didn't do anything. Okay. Our senators will be very disappointed if they put on bullish positions before giving them $20 billion. Oh, I don't like this instruction crap. I just noticed on the order entry here that instruction, that's new. Okay. I know I built the wireframes for this crap. That's that's not good. I don't like that. I still have this in here, right? Yeah. That thing is in there. All right. Anyway, um, I don't know why this one's trading for 96 cents. It seems like it should be trading for a little bit less than that. I might play around with some different strikes. Those are the right strikes though right now, like the 43, 41. Just bear with me for a second. I'm going to route one at 90 cents. Okay. In my opinion, that's where it should trade. I don't really care. So I'm going to route it at 90 cents and just leave it in there. Okay. That's correct, David. I jumped from Uncle Buck right to Mr. Mom. Similar time frame. Okay. I wasn't like probably old enough in the 1980s, okay, to watch those movies, but I did anyway. I'm the youngest. That's what happened to me. Okay. I'm the copy of the copy. Oh, there's another Michael Keaton movie. It's Multiplicity. Now that was like a cult movie, totally underrated. If you've never seen Multiplicity, you need to tune into that movie. It's great. The copy of the copy. I have one of those at home. His name is Zach. And that kid is just not right. He is just not right. And he knows it. It's good. Continuing on. Um, Wells Fargo. I wanted to jump back to this. I have 6 days left in Wells Fargo. $1.31 move still priced in. Definitely not out of the woods on this one. Okay. We would need some sell side activity. But here's a positive about Wells Fargo. Marketplace exploded to the upside. Financials exploded to the upside. Look at this. It's unchanged in the week. There is hope. Okay. There is hope on that particular trade. I'm very disappointed in Nasdaq right now. Okay. So somebody said they filled that at 90 cents. How did you fill that at 90 cents? You're killing me smalls, man. Seriously, how did you fill the Intel one at 90 cents? I'm not filled. Okay. Are we saying that, are we saying there's a chance? So you're saying there's a chance. I'm just full of movie quotes and crap today. So you're saying there's a chance. It should be at 90 cents, right? I just get, sometimes I just cancel, replace, move it around. I mean, look, we're all going to the same market makers. I'm moving it around a little bit and just seeing what I can do here. Hmm. Did you make sure you have the right expiration on? I mean, and again, just my opinion, it's fairly priced. I mean, look, there's 97, 91. This thing should trade for 95 to 96 cents. Like the market in here is 95, 96. Okay. Um, but anyway, I'll see if I can get that on there and going. Okay. All right. Let's move onward and upward from there. So I looked again, I looked at Intel, I looked at Google, I looked at Microsoft. Out of those three, I liked Intel. Like I want to take an in-out spread, but I know a lot of people look at the in-out spreads, and I know when I send out in-out spreads, people are like, why are you getting bearish? Because the bullish in-out spreads, they don't trade right. Okay. They simply will not trade. Uh, you just, to get a bullish in out spread, you would pay 30 to 40% more for a similar trade. Another opportunity in here. Now I looked at this in the max chart. This one also intimidates me. This is the XLE. XLE, I've had a lot of good trades in here. I've had a lot of bad trades in here. One thing I'm glad is I had a short position in here and I bailed that short position. Okay. I bailed out of that short position down here in this neighborhood. I was like, oh crap, this thing is ready to rock on a year-to-date basis, now up 9%. You realize here's another one that was down big. Anyway, I was looking for a bearish in out spread in here, and I'm like, no, this thing is aligning right now to break through. If anything in the energy sector, say what you will, but if this thing pops, okay, it's going to be a big move. So I was actually, and I actually want to show you, like, hey, look, I'm thinking probably the same thing you guys are in this one. I'm not a big like, get on trend, okay, but I do appreciate a good top being smashed through every now and again. I was looking for a bullish. Can you imagine that? Holy crap! Actually, I've got a lot of bullish trades on that have worked in the catapult side of things. But I was looking for a bullish in out spread, like a 92, 94. And here's the crazy thing, like the 92s, they're 45 cents in the money, but you're still paying 96 cents for this. Okay. It seems pricey. It's pricey. Anyway, this is a spread that is under consideration. Okay. It's under consideration. Here's one though, like I want this for like maybe 95 cents. I would be much more comfortable in the 95 cents arena because in my estimation, this is not like the rest of the marketplace, meaning the rest of the marketplace started rallying in November. This actually sold off considerably. Okay, this is a rotation later on. So if the whole marketplace broke down, yeah, maybe XLE would break lower with it, but it's so freaking close to some of the highs. This is one where could be a little of a self-fulfilling. All right. Um, anyway, I'm just looking back here. Some of the usual suspects. Good. Anyway, I'll work one at 95 cents in here. Right. And again, I'm just probing right now in a couple of different products. So I'm probing again in Intel and I'm probing in XLE. Right. And have I filled either of those? I have not, sir. I'm just going to create a duplicate order. And again, I'm not telling you, okay, to fill it. I'm telling you to probe. All right. Somebody else filled at 92. There's no way you're filling the right trades here. Let me actually put the correct trade in here. There's no chance of filling at 92 cents in here. There's no chance. Probing price. All right, so there's one that's probing price. I'm gonna come back to the Intel one, create a duplicate order. Okay, here's one that, again, I just keep cancel replacing it, but I'm probing price. Probing price. I like it. Okay. I have put the probes out. Let the market kind of come to me. Okay. Boy, this is dull. Okay. The S&Ps this morning were down 150. Where are they right now? They're down 150. Okay. It's exciting. Oh, the advanced decline line is 50-50. 50-50. Yeah, you know what? I can trade over in Tasty too. Okay. I have to look at what account I'm in. I have the power. Maybe I shouldn't trade in Tasty. My accounts in Tasty are very, very specific. Very specific. Okay. Got a new account in there I haven't even logged into yet, too. All right. Yeah, I no, listen, somebody said, how about Tasty? Maybe you're filling a Tasty. No, look, price is price. Like, it's just if you're gonna route a trade on thinkorswim and it goes through the Charles Schwab pipes, you're gonna route a trade on Tasty and it goes through obviously the Tasty pipes. It's one thing to get like a penny or two. It's a very, very different thing, okay, to, we're talking like 5 or 6 cents in some cases. So there's no question that some strikes might be wrong. Anyway, I put the correct expirations in. You're at April 19th. Okay. If you did fill, though, you can send me the fill in an email. Say, you're wrong. I'm okay with that. All right. I get the you're wrong all the time. It's called my wife. She can't wait. She can't wait. What was that? She like comes out of somewhere. So, look, if I'm wrong, okay, she's listening right now. She'll know. I don't even know how, but she will. She waits for that crap. Okay. Doesn't happen often, but happens. Definitely happens. Back over to the dollar briefly. Although the dollar is actually sold off a little bit here since the open. The dollar is massively bid. Eric, I'm sorry, but that's awesome. um, yeah, I don't know how you would have filled it. Let me see if that's the right way. Yeah, that looks right. Okay. Hmm. There it is. You're wrong. What are you? What are you, Ted? Talking to my wife? Okay, getting together, telling them wrong. Anyway, the dollar has been bid. This is, we look at the dollar. The dollar was bid out of the gate this year. It didn't have negative implications to the S&Ps. The dollar once again is bid. It's not having the S&Ps are down 75 cents. Like it's not having negative implications to the S&Ps. Okay, but it definitely doesn't make me feel warm and fuzzy when I see the dollar ripping to the upside. And I still see gold, though, as like a breakaway. Gold hit all-time high and reverted back down a little bit. So with that being said, I've also looked, okay, at GLD a little bit. I'm perplexed in here. Okay. I don't want to bear up in like GLD, but at the same time, it's in like uncharted territory, unbridled enthusiasm. Okay. The the cool thing though is in something like GLD, if you actually look at like implied vol, there's an inverted implied volatility skew. That's right, inverted implied volatility skew. So you can do trades in here that are little funky trades, and that's a $5 widespread. $5 widespread is not a necessity, but the $5 widespread trades for like 230, not bad. I prefer though, like the 250 widespreads, crap like this. Okay. But for a $2.50 wide spread, you wouldn't want to pay more than $1.25, but it's $1.50 in the money. They're well priced, bullish trades that are well priced inside of GLD. But for right now, I'm shaking off GLD. I don't think I like it. I was looking at SLV, silver, similar. For those of you that know, I had all kinds of bullish positions. Yes, bullish positions. I made enough money on here. I actually bailed out. The last time silver spiked up, I sold. Basically I sold in this like neighborhood here. Holy crap! He filled on the XLE vertical. Okay, I filled though because the XLE is near lows. So XLE. All right, and this is actually a bullish trade in XLE. Come in here and create a duplicate order. Come in at like 94 cents. Hmm. I'm just briefly taking another stab at that one. So we know we can fill there. But anyway, everyone would have filled at these levels. Let's go look at volume and open interest briefly. So this is some of us. Some of you might be trading the same thing. We'll see. Okay, we will see. So again, I'm just probing. I think that XLE can head a little lower today, which would give us a very advantageous fill for a bullish trade. So again, though, I don't see a lot of price activity in today's marketplace. I'm going to come over here. Where's XLE? Oh, I forgot about TLT. There's the XLE. Move to group. Put this into the spread tracker. We're tracking it. There we go. All right, onward. So XLE have a marketplace that looks like it's going to break to all-time highs and well, very close to all-time highs, but we are going to be there for that one. Onward and upward from there. So as I was saying, the S&Ps are doing massively nothing in here. Ticks have totally flattened out. The advanced decline line's total sloptastic. There's no read whatsoever. NVIDIA still has a bid. NVIDIA is actually holding the Nasdaq fairly stable. There's definitely some call buying in here today. It's not nearly what it was, but there's call buyers in here. Not going to diminish. You can see that clear as day. There's call buying going on in here. It's bidding the stock, but it's just having a very, very meager effect. If you look at NVIDIA on the week, and again, I think it's really worthwhile that you do look at it on the week, it's towards the upper edge of an expected move. But it's not moving. It's not having any blistering moves. Last 3 weeks have been very, very mellow in there. In fact, its implied volatility has flattened out and dropped and flattened out quite substantially, which you look at implied volatility falling, you're like, that's it, it's over. Actually, on the contrary, one of the things that I said is simply this. If NVIDIA is to continue to go higher, which is, obviously it's plausible, but if NVIDIA is to go higher, I mean a little bit higher, a lot higher, the implied volatility had to do what? It had to fall. The implied volatility has to fall because it makes it much more appetizing to want to buy out of the money calls. And that is exactly the reason I said NVIDIA is going to fall, because its implied volatility was way too high. If you guys remember, 3 weeks ago, I'm like, it's going to have a really big down day. It had a really big down day, and we hit one on that one, but it's flattened out since. Flattening out, it's a bad thing. Flattening out has allowed the implied volatility to cool off. As the implied volatility cools off, it can make call buying very appetizing again. Okay, there we go. We're buying some more. Okay, so XLE is it's happening. So XLE, I'm definitely getting some fills in. I'll get this one ready. Create a duplicate order. I'm going to copy this one. Bear with me for a second. Get this one sent out. And again, I'm going to post this one in the chat room. I'm going to work one more at 94. Work it. There we go. See, no, 94 is actually a really good fill in here. It's a really good fill because I went and created a duplicate order. The mid was 94 and it was showing 95 debit a second ago. So I think 94 is a really good fill. That's where it should be, in again, my opinion, priced. And the stock is only backed off 2 pennies to get that fill. Looks like it's going to break lower. That's okay. Everybody will get filled at that 94, 93 cents. Um, let's go onward and upward from there. So I was able to fill 3 of those spreads. I'll work some more maybe later. Let me come back. I'm also again, I'm still working the trade specific to Intel. If I fill Intel, I'm taking it. Like I'm not going to cancel the Intel order just because I filled an XLE. I like all of them equally. This one though, it's pricey. It's way too expensive. And I just don't know why. Like I'm at 43.41. We're trading like 42.26. Yada yada yada. I want that one, but I don't want it at any other price than 90, maybe 92 cents at most. That would be reasonable. Okay. So Andy's saying my order's just been sitting there. Cancel replace, man. Cancel replace. Um, so back in XLE, everybody would fill now, but in XLE, you can see the contract size start to pick up. Not a lot of people, but the contract size will get big. Yeah, everybody's filled in here. I mean, I can see the stock. It just traded down 7 cents. So if it trades down 7 cents, you're guaranteed. Okay, guaranteed. You don't see guarantee on the box, do you? It's a guaranteed piece of. Okay, we switch movies again. Okay, the guarantee on the box. Come on, everybody's got to know that movie. That's another one. That ain't a cult movie in your home. There's something kind of wrong, right? Hmm? Continuing on over here. What else do we have this morning? Oh, TLT. I have to go back to TLT. So in TLT, I'm in the money. Am I making money? Yeah, but like a couple pennies. In the TLT trade, I'm just going to whack this so I don't forget. I'm not joking. Like I'm selling it because I'm scared I'm going to forget about it. So I made like a couple of bucks on it. This is a TLT call. The hell, that should have been 47 cents immediately. Okay. By the way, when you go like watch this, when I go cancel replace, I want to show you something. If I come in here at 46 cents, the market's 43.47, right? The market's 43.47. If I come in at 46 cents, this should immediately change that market from 43.47 to 43.46. When I hit confirm and send it, that should go to 46 instantaneously. See how long that took? It's ridiculous. It's ridiculous. That takes a second to get in there. That is crap. It's 2/100ths of a second. Should be 2/100ths of a second. Should be in there. It's crap. Anyway, I'm 46 offer right now. Selling a TLT. Selling TLT. I bought those things for like basically that, but whatever. I don't like it. I'm ready to go. I'm going to be honest with you. If I don't sell my TLT, I'm going to forget about it, and then I'm going to get assigned. Okay, and then all hell is going to break loose. Okay, dogs and cats living together. It's going to fill. Oh, come on, 42.43. Are you kidding me? Okay, it's just a bunch of crap. It's a bunch of crap, I tell you. It's a conspiracy. Um, NVIDIA. Okay. There is an attempt in NVIDIA right now. Look at this. Look at the number of calls that are being bought. It's huge. It's just not moving the stock though, like it did. It's something's broken in here. The trade that was moving markets is breaking. All right. It's up 1%, and I'll give you that. It's just not moving things. And there's no way like Google hasn't been squeezing. They're buying calls in Google too. I can see it. I mean, as clear as day, but it's just, on a percentage basis. But Google is really chaotic to move because it's broken into 2 different parts. So it's a very funky little arbitrage. Um, very funky. All right, close that up in here. I don't, again, I assumed this morning that the NASDAQ would back off. I assumed it would back off a little bit more than this. I'm not talking like a precipitous sell off, but I am looking for some sell side activity. Moreover, Tesla's already come back this morning. So as Tesla comes back, I hope they sell Meta. I mean, really at 505, okay, really? Oh, this thing is such a pile of crap. Okay. Yeah. If there's signs of a bubble, okay, if there's signs of a bubble, I'll show you why. Okay. Why a bubble? Why a bubble? Why a bubble? Why a bubble? And then we're going to have an interesting discussion. The whole argument of like bubble, not bubble. Okay. When 94.4% of your business, okay, is Facebook advertising, and you're just buying the stock for what reason? I know their books are getting better, but they have something called AI. These are the signs, people. These are the signs of the bubble. 95% is advertising. Now, why do I question Meta? Why do I question advertising? Let's go look at Google for a second, which is unequivocally rallying today. So this thing's such a piece of, okay. If you pull up Google, Google has 71% of their business in advertising. So why do I give a crap? Okay. Who advertises? You tell me who advertises. Okay. I wasn't even on aisle 7. I love that one. We're back to Mr. Mom. We're going in circles over here today. Okay. The common thread, it's all the 1980s. Okay. When I'm tired and like short circuiting, my brain goes back to like the 80s. He's tired. He's short circuiting. Okay. Let me just look at the spread really quick because we're about to send one out. Just bear with me for a second. April 19th. That is correct. Buying the 92, selling 94, 94-cent debit. Yes. Okay. Watch the volume in the XLE now. Here it comes. We'll come back to Google in a second. Okay. Watch this. So we're at 232, 316. Okay. See something fun is when we send this sucker out. As soon as it goes out, the volume will start to jump. So I found the other day as we send this out. Come on, this damn thing. I found the other day. There goes. I found the other day the second that we send out the text message, it looks like somebody's got an algorithm on here and trying to jump on board. But get your trades in. Get your trades in. Trade now, forever hold your peace. Huh? Anyway, we're sending this out, and the second it comes out, and when you text something though, it doesn't come out all per se at exactly one time, but you can see the contract size will start to jump the second the text message actually goes out. What am I? There it is. It's out now, and the contract size start jumping in here. But you'll look back at this in a few, and it'll be like 1,000 contracts traded here. So somebody's watching. Okay, somebody's watching. So contract size is picking up. Bear with me here. Shopping. Did I not fill the TLT? There goes the TLT. I was literally looking here and I'm like, I didn't fill the TLT. I forgot. That's why I was going to fill the TLT because I was going to forget. Oh yeah, this is an easy fill. Okay, cool. All right, we'll close that as the contract size starts to pick up. So back to Google. So anyway, I was talking about before I was so rudely interrupted by myself. I was talking about Alphabet, okay, and I was talking about Meta. And I'm bothered by both because I was looking at their company profiles. Look, I don't have to look at the company profile. This is a Trefis estimate. Trefis is kind of a cool company, but the Trefis estimate shows 95% of the company is basically in Meta is advertising. Google is 70% of the company. But I asked the question, who does the advertising in the end? Who's actually paying all that money for advertising? Okay. Well, I'm going to start with this one. Lulu. I don't think Lulu advertises that much, but I just wanted to make a point. Okay. And my point is a very simple one. Okay. Retail is getting the absolute beep beaten out of it. Right. This is not a good sign. This is high end yoga wear. Okay. I am not wearing Lululemon pants today. I swear to you, I'm not wearing Lululemon pants today. Okay. They are Lululemon knockoffs. Okay. But they're not Lululemon pants. Do you have any idea of the comfortability of a 5-way pant? I don't even know what the hell that means, but they're 5 ways. Apparently, I can move my stuff in 5 different ways. I don't know what stuff that is, but I'm going with it. So, by the way, I had to get up and actually move in like 5 different ways there. It's a damn good thing the camera's not on today because I was moving in 5 different ways. The Google, okay, might be getting a little bit worried that some retailers are getting hammered right now. So, so the stock actually moved down just about $80. The reason I'm bringing it up is it's not the only thing that's moving down today in terms of retail. Look, the expected move is $40. It's exactly 2 times the expected move. I always talk about that. If it misses one, it goes for two. It's exactly 2 times the expected move. Try for the corner and miss. It's a huge, monumental move down in Lulu. It's not just Lulu, Nike, Nike earnings. Okay. Nike earnings, not only did it fall, it continues to actually see some sell side activity. It's about $8 in the movement. That was exactly what it was supposed to move. So, but they're falling, and both of them are actually falling on piss poor sales. Okay, now, all right, so Nike and Lulu, yeah, whatever, man. That's not going to make anything. So I looked back again at like Ross stores, discount retailer. They like me. Then I looked at like JW Nordstrom's, and this thing is still bid up, which I'm rather surprised. Okay, but there's this one really strange thing, and that's this. If you haven't looked earlier in the week, Gucci came out, and then this is like Signet Jewelers, yada yada yada. They own all the jewelry shops in like the in the malls, okay. And this one actually had a precipitous drop as well. There is unequivocally high end retail sales suck right now. Okay, these are not everyday companies. This is not like a Costco. This is not a Walmart. You're looking at a jeweler. You're looking at $120 yoga pants. And I'm going to be honest with you, like Nike, okay, say what you will. Those shoes are out freaking rageous right now. Okay. I won't even buy them anymore. I'm honest. Like I will not buy Nike. I'm not paying $150 for a pair of freaking crappy ass sneakers. Okay. Yeah, I said it. Uh, actually buy those on cloud ones. Those are expensive too, but they're at least worth it. It's like Swiss made. Okay. It's beautiful. In any regard, you better watch retail very carefully right now because Gucci got hammered earlier in the week, hammered. And Gucci doesn't trade here in the US. So then we started looking at like a couple of other retailers, but now you got the likes of like Lulu. Lulu has been untouchable, people, since the pandemic. I mean, literally untouchable, okay, since the pandemic. This thing has been rocketing up. Yeah, it's all some sell side activity. Okay. This is going to be a precipitous drop. This is not going to stop either. I think that this is going to be a big drop in Lulu. Lulu is something I traded in the past. Okay. Not a great feel for right now, but it is what it is. But one thing I want you guys to understand, no one stops advertising. Okay. When they're already taking a hit in sales. In fact, some of them even push more into advertising. You would see Google and Meta take a hit. They would be the very last ones to take that hit, strange as that may sound. Nobody's clipping advertising just yet. Way too early. But I wanted to point that out because the biggest hits come at the end, where all of a sudden you're like, I don't have money for advertising. Speaking of advertising, NVIDIA has stalled out in the last couple of moments. Look for calls to be sold in here, and they're starting to sell some calls. The number of calls being bought versus the number of calls being sold unequivocally is kind of evened out a little bit. NVIDIA could actually be coming down. Incoming! We'll see how that plays out. And all you have to do is go back in there and buy some more calls. Okay. I know some people probably were involved in the IPO. I'm not a big fan of IPOs. I'm never going to be a big fan of IPOs in this marketplace. Reddit spiked and faded already. I'm not a fan of IPOs. I know that an IPO came out the other day, an AI, and it soared, yada yada yada. Okay, look, the IPOs these days, and I don't mean to be, uh, too negative, but you'll be hard pressed, and I'm serious. You'll be hard pressed if an IPO came out in the last 5 years. Okay, find more than 3 of them that are above their initial public offering price. Okay, I'm serious about that. You find 3 IPOs that came out in the last few years that are above the initial public offering price. It's damn hard to do. I'm sure if somebody can do it, I'm not talking just pieces of crap that nobody's ever heard of. Okay. You find 3 stocks that IPO'd that were gathering more than like, $500 million, which is still nominal, but whatever. You're not going to find them. It's crazy. You say, why? Why are you so negative on there? Because I've been in the IPO market. I was, in the IPOs. That's where I started. Like in 1998, we were buying IPOs like crazy in 98. We're huge customers in IPOs. So I worked for the group that was market making, but we were also heavily involved in initial public offerings. And it's just they are few and far between. Okay. You're just not going to find stuff that's above the initial public offering price. And I can just go after, one after the other after the other. You know what AI feels like? AI feels like a juiced up version right now of EV. It really does. It wanted me. I don't know. I wanted to bring up Lucid for this one. Okay, but it feels like really like a juiced up version of EV because on a percentage basis, it's not too dissimilar. By the way, this is Lucid. I had such high hopes for this company. Okay, seriously, I had high hopes. They're actually made in Arizona. Yada yada yada. They're barely in business right now. Okay. Anyway, Caterpillar seeing a little bit of sell side activity. A little too late there, Caterpillar. Okay. Uh, Look, I'll update you guys some of the portfolios. As somebody asked earlier in the TheoTheta large and TheoTheta small portfolio, yes, I am looking to sell a put, but give me at least a down day. Like if the S&Ps were down 20 or 30 later today, maybe I'll sell a put. I need somewhat of a down day. Somewhat of a down day. It's ridiculous to try to sell a put when the marketplace is basically flat. Implied volatility is not doing a damn thing. Okay. Like that's kind of how you have to look at it. You got to have trade can't just be done because you need to trade. Trade's got to be done because it's opportunistic. If it's not opportunistic, like it's not helping me at all to sell a put. It's offsetting some of my risk, but it's not helping me to do it in a marketplace that's flat to slightly higher in any given day. So it's again, it's important. Okay. um, yeah, Mark was saying this is not a great day to scalp, Mark. Like I can tell you that right now. It's not a great day to scalp because all we're doing is slopping around. Slopping around. All right, so I've already got the XLE filled. Let's recap a little bit because I do have to turn it over to the professor. Jeff Bierman will be waiting in the wings, coming on here momentarily. See, the contract size jumped. It's not home though yet. Okay, we're not home yet. So a little bit of a recap. The XLE. So that trade, I've got a position in now. All right, we sent that one out. The other trade that we're actually looking at doing is Intel. Okay, Intel I have not sent out. I put it in the chat room. I'm probing order, but I haven't filled. Okay, Intel, I'm a bit away from a fill, and I'm going to be honest with you. I am not going. Okay, I'm going to stand my ground on this piece of crap. 99 cents. This thing's worth 90 cents. It's 90 cents all day long. The skew in here is not right. The skew is like flat, and that's the problem. There should be, more skew. Turn up the skew. The skew in here is actually kind of inverted a little bit. What the hell? It's Intel. Who cares about this pile of crap? Anyway, I want this one for 90 cents. I don't think I'm going to fill on that one. What else am I doing right now? That's about it. I may pull off, for those of you that are in Catapult, I may pull off some Catapults today. I'm shopping. So Catapult, if I'm going to get bearish somewhere, like Google, I'm going to do it with Catapult because I want to take a shot, but I don't want to pay for it. Like Meta, yeah, I'm seething in this. I'm going to take a bearish position. I like bearish positions in Meta. Okay. I really, really like it. They like me. They really, really like me. I want to get bearish in at least one of these tech stocks. Okay. I've got a bullish position on the side of Tesla. How's that working for me? I'm fine in there. Okay. It's all part of the program, but I want a bearish position in one of the big ones like Meta or Google. Okay. Amazon, Amazon's basically sitting at highs over here. Well, I shouldn't say that. Amazon's basically at highs. One of the reasons I'm not actually shorting in Amazon. Earnings don't scare me, but I do have to turn it over to the professor. Jeff Bierman's going to be coming on here momentarily. Guys, you shouldn't have any tech problems today because we rolled back to the old technology. Hopefully everybody's good. Okay to go. Okay to go. Anyway, Jeff Bierman, he's going to be talking about May the Force Be With You, Classic Candlestick Momentum Patterns Part 2. Stay tuned. Jeff Bierman is coming on right now.